So before Kshitij takes over, let me introduce to you to Kshitij. By the way, this entire event has been planned with extensive help from Kshitij. He is from this sector only. When I read his bio or profile, you will come to know about that, So with more than 10 years of experience at the intersection of product, technology and engineering, Mr. Kshitij Shah is currently a consultant and advisor to multiple companies in D2C and FinTech sector, and he focuses on strategy, go-to-market and fundraising. He is integral part of the board of several such companies. He is also an investor and he has worked closely with the founders actually. So he can tell the story much better now, Andar ki baat bata sakte hai. Between 2017 to 2021, Kshitij was the principal at 3-1 Capital, venture finance company. He helped the firm to scale up to rupees 2,000 crore in AUM, asset under management, with 100 plus companies in their portfolio actually. They funded them. He has spent majority of his time with the founders on inorganic growth strategy and build the corporate development, alliances and communication practices for the firm. Prior to 3-in-1 Capital, Kshitij has held several roles in all sizes of companies in Silicon Valley. Firangi admi actually, wahan pe se aa raha hai. And he worked in companies such as Edcast, Atpon and VMware. And through these roles, he has worked on multiple software stacks and traversed the entire spectrum of front-end development, back-end and API development, middleware, build tools, and infrastructure management. He's done masters in software engineering from San Jose State University, USA, and of course, Gujarati manas che, Baroda se, he has done his bachelor in computer applications, So with that kind of profile, now I request, Kshitij to come over, take the stage, and enlighten us on this entire, give a macro view of the FinTech sector. Actually. Thank you, Kshitij. So we will go down. Yes.
Good morning, everyone. We'll try to make it as interactive as possible. So my request is always going to be, there is a lot of different age groups and stakeholders in the room. So let's do a quick kind of show of hands. How many students? All right, awesome. Okay, great. How many finance professionals in the room? Okay, fantastic. How many non-finance professionals? Okay, fantastic. And finance is everywhere. That is true. That is true. In fact, I was going to say, sometimes people ask me, you studied engineering, you have a full technical education. How did you end up in finance? And I said it's, just by pursuit of curiosity, you have to understand finance. There is no escape about it, right? The more time that I spent in finance, in the venture capital ecosystem, the students might be interested in the room. It seems like boring for the first 2-3 years from the outside, but it's actually one of the most creative professions you can pursue in all ways, right? So think about that, and you can, if you really get interested in your work, you can have a lot of fun. So with that, I think I want to really encourage all kinds of questions. There is no question that you cannot ask, right? From to all the speakers, right? And I'm speaking on behalf of all the speakers, is think about flow of money and think about what enables that flow, right? Money is something that outside of the physical notes moves around very seamlessly in our entire ecosystem. And it's important to understand how it moves around. right? And it's important to understand how people in this room are enabling to do that, right? Finance professionals in the room are using software for their accounting purposes, enabling that flow. Friends like Ankit are enabling trust between multiple parties in the financial ecosystem, which enables this flow of money to be seamless as well, right? And it would be great if you guys can think about that question. Of course, Professor Jaju has been very, very kind to allow to put together such a diverse panel, right? And along with Mr. Sambamurthy explaining CBDC, right? I think I have requested Ankit to kind of, if I remember Ankit correctly, to spice it up for the younger audience in terms of the FTX crypto crash as well, right? And how that has happened and what implications, trust and fraud and security plays, the role that it plays in enabling a very vibrant financial ecosystem. And Ankit is kind of the best person to help us understand all of that. So it's going to be very diverse. Feel free to ask questions, right? And I think we have reserved a good 10-15 minutes at the end of every session to be able to answer questions from all of you, right? With that, I'll not take more time. I must confess, I have been secretly inspired by Professor Jaju in adopting his sense of humor with language a little bit, right? And you'll see small glimpses of it throughout, so I must give him credit for inspiring me on that. We all know about Jandan, Aadhaar and mobile, right? I've not gone too deep, but all of us must acknowledge and continue to remember the role that this entire stack has played in terms of enabling our ecosystem where we are today in all formats, right? And when people started out, they did not realize the implication, but the entire foundation has been built on the JAM stack. And because it's called JAM, I think it's a very sweet analogy that all the flavor in finance is enabled by JAM, right? And whether it's good or bad. Stats are very self-evident. The kind of penetration that we have that Mr. Radia spoke about, the kind of usage that we have, speakers from MPCI that power that entire foundation, they will help you understand why UPI has become so powerful as well, right? And not just in our country, around the world, UPI has become a force. So this is something for us to kind of be rooted in. A very quick abstract understanding, and this is in no way complete, right? But the entire landscape of FinTech can be divided into these areas, right? At the top, there's payments, there's lending, there is wealth tech. Wealth tech is including everything, investments, direct investments, stock investments, mutual funds, and so on and so forth. And then there is insurance, everything related to insurance, right? I've added tech at the back of everything just because it's a FinTech conclave, right? But it's used in the background and it's used as products altogether. I think very interestingly, we have the entire FinTech infrastructure layer as well, right? And something that I would love to touch upon for a few minutes is, socialize with the room the advent of neobanks, right? And what is a neobank and how they are actually playing an influential role in terms of shaping customer journeys and digital journeys as well. Luckily, I think in this entire equation, we have solid representation across multiple layers, right? With NPCI, with Sciency, with Mr. Mehta joining us right after this to help us understand payments. And I think, we were chatting with Mr. Arya and Professor Jaju. I think eventually the goal probably would be to hold a second phase of this conclave, sir, with the rest of them, speakers invited as well very soon. So, knowingly or unknowingly, if any of these logos seem familiar, and this is not even an exhaustive list, you are a customer, right? Today, Ankit might not be able to share who are his clients in terms of a complete list, but if you're banking, there is a very high probability that you are Sciency's customer indirectly, right? In the MSME space, Prateek is here, and if your business, be it a small business or a large business, or your clients accept a QR code, right? Bharat Pay led that entire revolution to happen. And then, Prateek went ahead and said, okay, how can I underwrite this data to get you more flow of money to grow your business, right? So whether you realize what product you're using consciously or unconsciously, right? You're always a fintech customer. As Sir said, finance is everywhere. You cannot escape finance, in your day-to-day life. In terms of fintech per se, of how this classification has become, China definitely leads in penetration and density of fintech, right? You will see, of course, in a lot of ways, we are only comparable to China because of the population size and scale that we have. China has about similar population, 1.4 billion. Total fintechs around 2,500. Our penetration of fintech is much higher, right? We have 7,400 fintechs actually enabled in the country, and very close, 24 unicorns in China so far and 25 unicorns in India, right? And the interesting part to notice in this graph is Singapore, because of its fantastic tax framework, is known as the epicenter of finance in Southeast Asia, right? But both India and China are leading in terms of flows, right? And we are far ahead of Singapore as well. But Indian fintech is growing much faster than China, right? So that is very evident from the total investments that have happened in the last 5 to 6 years. The investment growth rate between 2016 and 21 in India has almost been 57%, right? And US continues to dominate because of the strength of the dollar capital and the dollar being kind of acceptable everywhere in the global economy, right? Again, similarly, you will see that India and China are very similarly placed, very close together, but US is far ahead, right? So when we think that are we mature as a fintech economy, as a fintech ecosystem, I think we've just started, right? We have not even scratched the surface, and there is a lot more work to be done in that sense, innovation opportunities that are possible. But anybody who follows fintech markets closely will come up with a counter argument. Paytm ka IPO ho gaya, Policy Bazaar ka IPO ho gaya. We lost a lot of money. What happened? Are they supposed to be fintechs, or are they not supposed to be fintechs? Do we call them very differently? The joke in venture capital ecosystems about 2 years ago, before the valuations didn't happen, and even more right now, is aap kitna bhi funding kar lo, it will only become important once you cross the quarterly profits of HDFC combined, right? So that is the disparity of our ecosystem as well. Considering that some of the private sector banks and public sector banks, SBI and HDFC, are such large compounding forces, that fintechs will always have a challenge. But I don't think us entrepreneurs are ever shy of taking up that challenge, for increasing customer confidence. So I think why this is important to understand is, though Mr. Vijay Shekhar Sharma might appear to have very passionate arguments on media when he is asked a sensitive question about his IPO price, it is true that the business of finance is more complicated than ever. And hence, it has become very difficult to understand and decode the true value of companies for the kind of businesses that they do. Right? Earlier, the companies and banks are fairly, in comparison to fintechs, fairly straightforward, lending-based books, savings, CASA deposits, growth, NPAs. 5, 6 simple parameters can tell you the health of a company in finance, especially in banking. But today with fintech, that is not the case, right? And I think we as an ecosystem need to spend a lot more time in terms of educating ourselves to understand what does a fintech company mean and what are the parameters to judge them by, right? And that's where I think the public markets will catch up to that. I don't think the public markets have completely matured in terms of understanding the scope and the depth at which the fintechs operate. And that over a period of time will definitely lead to increase in confidence, right? We are also an economy of following global cues and triggers. US में क्या होता है, UK में क्या होता है, Japan ka bond rate kya chal raha hai, and all of that, right? So those global triggers will continue to have influence over our economy. But I think it is extremely crucial for us in the next 3 to 5 years, right? Because I think majority of us would agree that we have entered a bear cycle now, right? And now is the right time to build and innovate in terms of hard problems. We will have to also continue to find our own confidence in the Indian markets. If we only take cue from US interest rates or US NPAs, right, or US index returns, and what their government is doing in terms of federal funding rate hikes, I am afraid that we will have a very one-dimensional approach to understanding things in our own ecosystem, right? And I think Unmesh, when he comes up, will help us understand that proactive regulation is helping us increase the speed of adoption across everything in FinTech, right? And how it's helping that. And our regulators, all our regulators, in fact, have done some fantastic amount of work. There's one chart that I was, going to include, but I didn't get the time. In the last 5 years, there's been cases of a loss of about $1.4 billion in US by a single company, for example, where they have failed to regulate themselves. And I'm not even talking about the crypto FTX crash in the last couple of weeks, right? And their regulation has failed protecting consumer interests. Whereas we might not have had successes, and sometimes us as entrepreneurs, continue to struggle with the changing stance of our regulators respectively. But they have played a very crucial role in protecting consumer interest, which is extremely important to maintain the confidence in the economy, right? And that balance is very, very vibrant in our ecosystem, which is good to have. So interestingly, higher regulation, right? And this is where the kind of the geek comes out in me. I say is equally cool to, in terms of programming, higher confidence, right? Because it really directly is correlated with higher confidence. Higher regulation is directly correlated with higher confidence. What you see as a list is just a very quick headline of the kind of regulatory notices and approaches that have come out by different regulators in our FinTech ecosystem in the last couple of years, right? Right from digital guidelines for protecting borrowers to neobanking licenses, to being FinTechs are pushing the boundaries in terms of enabling credit lines, and then RBI coming back and saying, okay, this is possible and this is not possible, laying out the guidelines very clearly for them, right? NPCI taking UPI global. I'm very excited to have Mr. Vishal Kanwati here today to help us understand the power of that. And mind you, I don't know, Mr. Kanwati will be the right person, but I can tell you as an industry person, globally, there is no counter to Visa and MasterCard, and we are the only country with RuPay to have that. We're the only country with RuPay to have that. Where does it play a role? Russia got sanctioned, and some of you might have read the headlines that they were omitted for flows of funds from the SWIFT ecosystem, right? That SWIFT ecosystem is a protocol that is built between banks globally to enable flow of funds, right? With our infrastructure, with UPI leading that kind of charge on innovation, we are well protected. People cannot threaten us that we will cut you off from the financial ecosystem, because we have a self-sufficient financial ecosystem that is not just powering our own economy. We are now taking that technology as a public good and sharing with global participants. It's tremendously powerful for our national security, right? SEBI guidelines again for mutual fund platforms, discussion papers on payment charges, and the CBDC launch, right? Think about it. All the cricket fans, I think, I'm a strong believer, everything in India can be explained through cricket and Bhagavad Gita. Two things, in these two combinations. You can explain everything. But our regulators are playing on the front foot. We can debate whether they are Sehwag, Dravid, or Kohli, right? But the truth is they are in the top lineup. right? And they are encouraging and pushing companies to do it faster, smarter, better, but with all constraints kind of considered for the ecosystem as well. Whenever regulators have played a active role, it has always aided growth momentum. Always, right? The top chart is a very complicated, dense chart, but essentially what this is trying to showcase to you is between 2010 and 2023, whenever there has been a major action by the regulator, companies' valuations have jumped and gotten destroyed as well, by the way, if they're on the wrong side of regulation. So it's not just the sunny side up, but if you're on the wrong side, if you're pushing the boundaries way too much, if your risk parameters are too high, they get reined in properly as well, right? And every time a semi-regulation kind of comes up, there is clarity. You will see, the kind of deals go up, the valuation goes up, the time to market, kind of reduces, and things like that, right? So here is, you might not be able to read, but companies like Stripe, Lending Club, Square, SoFi, Coinbase, all of them are plotted on this chart of when they started in support of what regulation. US, even though it seems like a very forward-looking and tech-heavy economy, it has its own challenges, right? One of the simple things to really remember the strength of the fintech ecosystem in India versus US is when all the COVID relief money was given by governments for their specific recipients, be it companies or MSMEs and so on and so forth, right? The US ecosystem paid approximately 13% of the trillions of dollars of COVID aid and relief to banking ecosystems just to make that money reach the intended recipient. We spent less than 1%. We spent less than 1%, right? So the taxpayer money is being routed through such efficient financial infrastructure that it has no comparison globally. With all this said, right, I think some of the younger friends who don't like to visit bank branches to get their ATM cards activated will still agree that our banking system requires a lot of innovation. I, as a mutual fund customer, I'm still surprised in 2022, I'm not able to change my address after I have set it up in a mutual fund, right? So it's the ironies are clear. I think no one is trying to play hide and seek with those kinds of ironies in our ecosystem as well. But those, in my opinion, present plenty of opportunities for innovation through digital journeys, through digital enablement. COVID may, if anybody wanted to open an account, and as soon as the regulators approved that yes, everybody can adopt video KYC, right? I think SignZ was probably one of the only companies, right? There would be probably 1, 2, 3, 4 kuch company hongi, right? 4 out of 4 or 5 companies to have a full enabled video KYC stack, plug and play, that the bankers could use to enable and give you all the services that you require. Advisory problems, changing documentation. I don't know how many of you get interesting, funny calls. मैंने एक loan लेके रखा है गाड़ी के लिए. The bank calls me, sir, you have been paying your EMI pretty well. Why don't you take another loan on top of your loan? And I was like, sir, क्या कर रहे हैं आप? गाड़ी एक pay off की नहीं है मैंने, और you're selling me another loan on top of it, right? These are challenges of penetration of good credit flows, which are solvable by data, and fintech companies exist for it today, right? You will see slowly banks catch up with all of it. They will understand what you require at what stage in your life. They will not try to sound naive by trying to sell you, double the loan amounts on what you already existingly have, and things like that. So there's plenty of innovation that can happen because of the current experiences in our ecosystem, both banking and non-banking. And these exist in lending, these exist in various other ways, right? If we understand the opportunity, I think it is time for banking especially to adopt mass personalization, right? And those are two contradictory words. Personalization is kind of very individualistic, but it has to be enabled at mass scale. You will see with onboarding, KYC, accounts aggregation, the branch network, all of it, right? Today, all of us we don't have a single role in our daily lives. We wear multiple hats throughout the day, right? I might be an entrepreneur some part of the day. For the other part of the day, I'm a family man, I'm a husband, sometimes I'm a son. Mom still tells me, I don't want to do the digital transaction, you do the UPI transfer, otherwise you take the signed check from me. So, right? So these problems of trust exist in various ways. And I think we continue to push forward in our own personal capacities. But banking has now enabled multiple services. Today, your bank is no longer just checking your account and making transfers, right? You have mutual funds in your bank, you have loans in your bank, you have credit card products in your banking app, right? The banking app itself is so vibrant. Think about it. And that's kind of insane to consider, the possibilities that it opens up. With that, I mentioned about neobanks earlier, and I want to kind of bring it up. Neo-banking is not new science or a new product, right? It has gone through an evolution. You'll see it started in the 2000s with enabling of net banking, led to mobile banking, and then the payments revolution happened with FreeCharge. And Mr. Mehta has just joined us, in terms of helping us understand. I think, we're looking forward to him speaking on the payments piece and how he's kind of pushed the envelope with everything that InfiPayM has been doing. But the payments revolution made everybody comfortable with digital flows of money, right? I think that was the tipping point. And then it got picked up with app-based banking and then neo-banking becoming very core. Neo-banking is not a new bank. It cannot exist without a core banking system, right? But all your journeys are digital first and have become seamless because they understand customer journeys much better, right? And that's why they can approve your credit in 30 minutes, whereas a bank might take 30 days to be able to do that. And the important thing to notice is, are they even leaving a dent? Are they meaningfully doing it? I think they are. Yeah, look at this graph. Total HDFC and ICICI have about total 16.3 and 12.8 million cards issued in the ecosystem today. And take a new competitor, Slice, new competitor in the credit card space, right? It's already at 7 million. The company is less than 4 years old. If you see number of cards issued every month, Slice is issuing about 0.2 million cards every month, way higher than HDFC and ICICI combined. Right? Debatable, again, whether they are enabling good credit, bad credit, not getting into that debate. So debatable, 100%. But the point is that the maturity of the infrastructure has become so high that you're able to scale so fast, and fintechs are coming to it, right? I think they're leaving a dent globally. Fintech companies are leaving a dent globally, right? With neobanking, year on year has demonstrated 51% increase in transaction value, right? Privileged to be an investor with a company called Bank Open, which is a neobank for SMEs. They have captured billions of dollars in flows in less than 4 or 5 years that they have been existing. Billions of dollars of flows, right? And they're still a startup. So they are definitely leaving a dent, right? And I think the demand for these kinds of services will continue because you just look at the spectrum of formal credit and informal credit, right? The demand for informal credit continues to grow in MSME space. So there is not just product innovation that is required here, the penetration opportunity is also huge in the MSME space. And this will definitely lead to reshaping of our loan books. right? The entire bottom of the pyramid is changing. The enablement in tier 2, tier 3, tier 4 towns is happening at a very fast pace through all of these kind of product innovations. So I am a genuine believer that the red line may look very thin right now as compared to the entire pie of the ecosystem in various financial services. The red line represents digital share of revenue. And then there is traditional, the gray area that is huge from a financial services perspective. But it's slow, but it's chipping away, with the traditional folks very, very meaningfully. And in a win-win, I think one of the things that we have to be very thankful of is in all of this, the win-win is for us, customers, individually, as entrepreneurs, as retail investors, as our savings account get higher, and so on and so forth. Right? And this is not just enabled by tech. Right? I'll not dive too deep into this. Every step of your customer journey is not just enabled by tech. Right? It's actually built on the foundation of tech as infrastructure. So only key takeaway, if you were to, or I were to suggest you should have, from me kind of sharing all of this is, tech is not enablement, tech is infrastructure. Right? And that today is applicable in finance, tomorrow will become applicable for everything else. Technology, I think, the same ways, chartered accountancy would be a very privileged education and merit to have, CAs, right? 10 years ago. And they are the fabric of making our kind of financial ecosystem work. They play such a huge important role. But I think one of the biggest things that the entire CA fraternity has done is they have focused on the work so much and not taken attention on themselves as specialists. They've stayed in the background, right? And they have enabled everything else, from our tax paying to everything else in our financial ecosystem. And tech is become that now. There is nothing that you can do without tech being a part of it, either as an individual or as a company. So tech, chartered accountancy, the entire fraternity are foundational pillars of infrastructure for our lives to happen, right? And I think we should think about it. The diagram, of course, we're running out of time, but I would have loved to dive deeper into the account aggregator ecosystem, which is enabling now data flows for enabling a higher amount of trust, right? And this is to realize big visions and large goals. Our regulators and the leadership of the country have done some tremendous amount of work. This is what you see is a very quick snapshot of what our payments vision is. The entire ecosystem is pushing, for example, to increase prepaid instruments transaction by 150%, right? Reduce cash in circulation as a percentage of GDP, right? And CBDC again is going to play a very major role for this. Increase the registered customer base for mobile-based transactions by 50%. Year-on-year, CAGR growth. It's insane. These are some very, very ambitious goals. So when we think about them, and when we think about tech as foundational infrastructure to make this happen, that's when we have a lot of potential. I hope this was not too boring. It might have seemed all over the place, but I think it was important to give you a sense of the kind of things or dimensions that are involved in the tech ecosystem. And each of our speakers today, I'm very happy to have, are going to dive way deeper into these things. Again, happy to take questions. Thank you so much. And I'll quickly answer a couple of questions without making all of you wait for our next speaker, Mr. Mehta.